Sunil, hi, good to have you on the show. Well, I see a lot of, stocks in your buy calls for Samvat 2080 with an upside of anywhere between 20 to 50%. But let's talk about the one which has the biggest upside. 5-star, you're suggesting a target price of 1100 on that one. Talk to me about what makes you so positive about 5-star.
See, five-star, this report came out few days back, and in last 3, 4 days, it has moved up a bit. See, the business model is quite different from all other small banks, small NBFCs. Here, the loan size is quite small, and that too in specifically in giving loan to business customers. We had seen small ticket size loans, but they are all in housing finance. But here, the business is quite difficult to do, and we don't find much competition for five-star businesses. And this quarter result also was so great, and they are consistently growing at over 30%. And looking at the business model and low competition, they can still continue to grow at 30% plus in coming next 2, 3 years. And also, important thing is their asset quality. Even though the businesses are difficult to do, and but their selection of loan process is very so strong that consistently they are doing keeping their asset quality very strong. So that's why we like this and had recommended this stock.
In your list of stocks, I see a few of these recent IPO as well, whether it's Sai Silks or Kalamandir or Vishnu Prakash Pungalia as well. Do you think these IPOs were very attractively priced and hence there's quite a bit of headroom for them as well to grow?
Yeah, definitely. In fact, we had recommended Sai Silk also. It's in retail space, specifically focused on women, wherein sari contribute around 6-70% of their sales. So the important thing is the business model is like that they are self-funded. They don't need to raise any great capital. They don't need much capital. They can do their on their any store level or even at the company level easily 20% plus ROE. And also the growth potential is quite well let down. They had opened around 9-10 stores last year, which are likely to contribute in the current year, and they will be opening similar amount of stores in the current year also. In fact, today also they would open 1 stores. So one more important thing which is quite attracted us for this particular company is that their store become profitable from the first day itself. They make an event of opening any store and they start making full profit on the first day itself. So that is quite different from all other retail players. So and the valuation also looks very attractive at 10 times EV by EBITDA of FY25. So which is much lower than all other retail players. So that also looks good to us.
The other one I wanted to talk about was SRF, which is part of your portfolio. Along with that, your view on the entire chemical space, because interestingly, it coincides with Morgan Stanley's note as well on the chemical sector this morning, saying that yes, it is undervalued, and they think the sector is underappreciated, and right now one can see big gains being made. What makes you enthusiastic about SRF in particular?
See, SRF story is known, means nothing different, and most of the houses covers SRF. When to buy, that is the key point in SRF. So, if you go and buy when things are very good, you will get at a very high valuations. If you want reasonably good valuation, you have to see some challenging times, which is related to industry, not to the company. So right now, what we are seeing that chemical industry is suffering from a lot of challenges, both domestic and international. So these challenges are there is an overstocking or liquidation of inventory, and a lot of prices of chemicals are coming down. So there is a lag effect. Once the raw material come down, then the finished goods comes down. So in some quarter they faces challenges. So all these problems are there. That's why the stock has also corrected, and we are getting at a reasonable valuations. But the long-term story for SRF and companies like that, which are high quality in chemicals stock, are available at reasonable valuations. So that's why we had recommended SRF at current point of time.
There is this whole talk about the realty and infra boom, which of course in Mumbai we can see all around us. Help us understand what part of your portfolio actually has exposure to this particular theme.
In this report, we had not recommended any of this, but we like companies like Man Infra. We had recommended to our customers this stock. Then, apart from that, Godrej Industry also looks bit reasonable and can see some growth from here. But more importantly, we would like to play this story from the companies which are supporting this real estate sector. In the sense, the whole the theory of supporting like companies like ceramic companies or pipe company, which are going into the constructions and all. So we had seen a lot of development recently, a lot of pre-sales happening, a lot of constructions are also going on, but the sales of all these ceramic companies and all comes afterwards. So we like that particular sectors a lot, and which can give a good, reasonable, specifically tiles and all, Kajaria and all. We prefer those stocks.
Mr. Jain, on that note, we'll let you go. Of course, we see stocks like Sangvi Movers, etc. in your portfolio as well in the Samvat 2080 recommendations. That could be one of the themes in the overall construction space. Thanks so much for making time and speaking with ET now with your Diwali picks for Samvat 2080. But shifting focus